Alright guys, so this is Maximus Trades here, and now I'll be finally going over my model and my strategy and what I use currently when I'm trading. So my model is kind of loosely based off of a couple of, it's based off other people, like influencers trading. Like TGR kind of built the foundation of it, with liquidity sweeps and inversions. But I took a couple, lessons from PB trades and just some other things. But I kind of tweaked it over the course of a couple months, and I'll show you the exact steps I use for my strategy and different things like discretion and stuff. So it's $1 million. I meant to do 100,000, but it's $1 million account balance on FX Replay. It's the month of November that just passed, so we're gonna be doing some examples, and I'll show you guys how my strategy works. So the first thing I look for is I'm gonna start at the steps. So the first thing I look for is a one. So for step one is a key level getting hit. So in terms of like what a key level is for me, it is either a session high or low in a 4 hour or 1 hour high and low. So those are normally my key levels for me. They can also be things like unfilled gaps, new week opening gaps, NWOGs, new daily opening gaps, unfilled gaps. So any of those key levels. So the first step is that key level getting hit. Then from there, we go on to step two. My step two is a 5 minute confirmation. So it's normally for me, it's either an inverse or value gap or a SMT in the direction I want. So say high time frame high, a key level high gets hit and gets swept out. That's my kind of indication that maybe I'm looking for shorts. Then after I wait for a 5 minute confirmation, so say I have a 5 minute SMT at that key level, say it's a London high, right? I have a 5 minute SMT at that London high, right? That gives me a confirmation that, yeah, we are continuing to the downside, right? So then from there, I look for a 5 minute retrace. And this could be in the form of, normally for me, it's equilibrium retracing. It could be a unfilled fair value gap. Yeah, it's only just those two for me. So I either wait for a 5 minute retrace into an equilibrium or even a 5 minute order block. Now, often we don't really see those after the confirmation moves, but any time we have a retrace into a key level, that's my other thing. That's my third step. So that's kind of our continuation. So this could be also said as our continuation. And then we look at our fourth step as we scale down to the 1 minute time frame, and we look for a 1 minute confirmation. 1 minute time frame for confirmation. So we're looking for a 1 minute confirmation. Confirmation confluence, and this can be literally from a break of structure, continuation, candle close, inverse or value gap, and basically kind of any like 1 minute kind of confirmation. And then from there, we just stops are normally above. So then step five is stop loss is above your retrace level. And you target basically all weekly levels in your direction. So I know it kind of seems a little confusing at first, but once you go through a couple examples, it'll make sense. So for my stop loss, so normally you just put it above your retrace level. So say we retrace into a 5 minute equilibrium of a candle, and then it would be your stop loss would be above that, and then you're targeting basically you're like a lot. So this strategy, some things about the strategy. So yeah, you're targeting lots of lows or highs in your direction. So some things about the strategy that I need to clarify is one, it kind of trades off a continuation of reversal, but it's not like normally what you think of a continuation, like we're going up to an unfilled guy up like in the middle of the move. It's really kind of that early continuation that we see in reversals. So it's technically it's identifying reversals and not necessarily entering right off at the beginning, but a little into that move. So you're identifying the reversal and you're confirming the reversal, and that's when you enter, right? And then this strategy requires you taking lots of partials because you're targeting your whole fundamentals are liquidity in the strategy because the whole thing is your key level getting hit. So normally I have at least 2 take profits. Most of the time I have 3 or 4 take profits on my trades. And the rule for me personally is after my take profit one should be at a level where after it gets hit, I should be comfortable with moving my stop loss to break even, right? So this is my strategy. I'm gonna make it a little smaller, maybe a little more. This is what strategies I use, right? These steps. So this is 9:30 Nasdaq. So I mean, one sec. There we go. 9:30 on the Nasdaq. Let's look at the news here. Today we have PMI. Right, it's Monday, right? No, it's Friday. Never mind. We have no news today. So let's look. So first off, we have this unfilled gap, which is one of our key levels, right, on Nasdaq that's been hit. So we might be looking for longs. I'm just gonna go ahead and mark out these relative equal 4-hour highs. Mark out highs here. And mark out maybe like this low here, right? Then I should go in the S&P, do the same. As you can see, we actually closed below this 5-minute gap, which could be something as towards a SMT, or not like SMT, but something along the lines of that, just to be aware of that the gap is holding up on Nasdaq, but it's not on ES. And also you can see we closed below this kind of order block ish. Where is it? We closed below kind of this order block ish low here on ES, and on Nasdaq, as you can see, we're still at this low level, this order block level. So that's something to be aware of. We have so just something to be aware of that ES is a lot lower than Nasdaq right now. But some things just want to point out. We have this. Oops. This text here. So we have this 5-minute key level, so an unfilled rally gap, and a 5-minute order block that's holding on Nasdaq, but on ES it's not. And I'm not really like following exactly like I'll follow these steps like properly, but a lot of like other things like discretion and just like news events, like just market experience things come into play, which makes this model really work for me. So these are just kind of like the fundamentals, but actually understanding the markets and having that experience is a whole other aspect of this model. But these are just the steps, right? So now I'm probably looking for longs because we've closed below this. Technically, this order block could be set as a low on the 4-hour on ES, as you can see. So we have somewhat of a bullish SMT on ES, but the main thing that's making me bullish on Nasdaq especially is we have this order block and the unfilled gap holding up. And most of the time, what you see price do with these unfilled, these new week opening gaps, right? They come down and want to fill them because it's an imbalance, and then they end up either ripping through them or reversing off them, and it's really easy to tell off the first few candles, and that's what I've heard and what I've seen. So now I just go down to the 1 hour and I just mark out some highs and lows, which may be useful, right? So I might as well just mark out these highs, these lows, and again, like a low like this, these 2 lows could give us an indication if we have an SMT or not, but we'll take a look. Just scaling down to the 1 hour now. So yeah, we do see, not really an SMT, but okay. Then I would go to the 5-minute, and what I normally like to do just to give me a help, like I know it's kind of like basic, but I just go and mark out London session. So the prime hour is London session, so 3 to 8, and just get like an idea of what price did here. So I use some session profiling too to help me get my bias in if I'm ever conflicted, but most of the time it's just high time frame confluences. But what session profiling does is it tells me, okay, London session manipulated and reversed to the upside. So that gives you an indication of longs because you want to continue. A continuation, that's just like a session profile that I've learned from a couple of videos. I'm not really sure how it works, but so if we are looking for longs, I would want to take out these equal lows first on Nasdaq and potentially make a SMT. So I would like to take out the equal lows on Nasdaq, and then what I would like to do if I am looking for longs, was one, take out equal lows, target these highs as my like TP1, close out 50%, just left like TP2, TP3 up like all the way up there. And if we just come up and market open and we rip up or above these highs, probably gonna take shorts down to probably like on if I'm looking at Nasdaq, probably like bottom of the gap or something, because uh there's two things, right? So one, we have that ES fully filled the gap, and there's a big possibility Nasdaq could do the same and just dump through this gap. But at the same time, you have this 4 hour confluence in that kind of SMT, which can propel it to go higher. But I'm pretty sure if price goes up and takes out these highs, these London highs first, before, so I'm pretty sure if price does not come down and take out these lows or even this low before it takes out these highs, we're gonna be short, bearish. But I think if we take out these lows, it's a clear move to the upside on Nasdaq especially. So let's see what happens here. There's no news, so let's see what happens. And then eventually, when we get one of those back to our model, when we get one of those key levels to be hit, we'll look for that 5 minute confirmation, 5 minute retrace. So what I'm really hoping to happen is close below. We push below these lows, and we have SMT on a bullish SMT for these lows, which would give you my confirmation, confluence, and then we can just enter off an equilibrium retrace on the first bullish candle. So let's see what happens. That's perfect. We come out, take out these lows. So I think we're probably gonna look to the upside. So let me see if S&P did the same. So we're not gonna have a 5 minute confirmation confluence here. Okay. There we go. First bullish candle here. I'm gonna go out and mark out this equilibrium. So we did have this. We don't really have a 5 minute confirmation confluence in the sense of, okay, like, yeah, I don't really have a 5 minute confirmation confluence we can go too much off of here. So we did end up coming down and taking out these lows. What I would like to see, remember in my strategy, I would like to see a inverse value gap or SMT. We could not get the SMT, so I'm probably gonna wait for inverse value gap. As you can see, by the way, the only indicators I use is this one for value gap indicator. As you can see, it's kind of these things over here, these small for value gaps. And it's just to save me time for marking them out. Otherwise, I don't really use indicators. But yeah, if we can inverse this 5 minute gap, they'll give me my confirmation confluence. And if we can retest one of these candles equilibriums, that'd be good too. So we come up, end up going all the way up, and I'm fine. Like, hopefully we can maybe have SMT. Yeah, that's good. So as you can see, now I'm looking for shorts. So I'll explain why. So we came out, take out. So okay, one sec. So market opened, we came out, dumped below these lows like I said we were going to do, and then we came up taking out these highs. And this would normally be my TP1, but the reason I didn't enter because I didn't find a retest at all. So I was right in terms of my discretion. Like if it takes out this low, it's going to go up to the high, right? But it's fine. We didn't find an entry. I'm totally fine with that because now we can be looking for shorts because we have an SMT here. As you can see, we did not close above this high on Nasdaq, but on ES we are closing at this high, right? So that's SMT. So now I'm looking for shorts down to this low and then floaters down. So I think that long move is probably done for the day unless we see some crazy continuation. I'm gonna see if my confluences stack up according to my strategy. If these confluences hit, I'm confident that we're gonna be bearish on the day. But the long move played out, right? So I'm gonna go ahead and mark out the first bearish candle. We're looking for a red candle. Okay, so I end up going above. Fuck, I did not want that to happen. Alright, we end up closing above these highs, which is kind of annoying. We're ripping. Okay, wait. So as you can see, we inverse this fair value gap on the 5 minute here, which is good because we were looking for shorts again. So if I'm going to pull up the high time frames here, we're coming up to this 1 hour value gap here. So we did end up actually ripping above, which is not what I wanted to do. But I'm still looking for shorts because I don't see, unless we inverse this 1 hour for value gap, I think we're probably just going to go up. But I'm honestly not too mad about missing out on the log move. I was right. I knew that was going to happen. but I didn't enter because we didn't have a retest confirmation. And at this point, I was still thinking maybe there's a chance that we just take out this high and dump, right? So I'm totally fine with that happening, but hopefully this short can set up for us. So we do end up taking out. Okay, that's good. So now what do we have? We have a key level getting hit with these London highs, right? Key level being hit, check one. We have a 5-minute confirmation confluence on NASDAQ by inversing this for value gap, check two. And now looking for a 5-minute retrace onto this candle. So we're either going to retrace into this for value gap, which is essentially equilibrium. So we're looking for a 5-minute retrace into this line, this green line, which gives us our 5-minute, that gives us our check three. And then we're going to look for a 1-minute entry. So let's see what happens here. There we go. As you can see, we fully retraced into that. And now we're looking for a 5-minute entry, a 1-minute entry. So I'm looking for a continuation close or even a small inversion of this gap here. So let's see what we can produce on the 1 minute. Okay, so when this happens, it invalidates this equilibrium zone. So it's kind of annoying. We did almost enter, but as you can see, what happened was instead of going down and continuing this close and not entering off this retrace immediately, we ended up coming above and closing above these highs. I'm just curious to see if there's one SMT to see if it can push us down. Yeah, there is. Okay, so I'm still waiting for confluence to happen. I don't know. We'll see. Okay. Now we're still chilling in this range. Looks like we're just gonna be chilling here. So we come down, finally take out these lows, which is good. Now I'm looking probably for a retrace into this. We just got the retrace into this 5-minute value gap, so our SMTs have been. So we had our 5-minute inverse. Now we had our 5-minute confirmation with this retrace into this retrace into this 5-minute value gap. Now the thing is, there could be a liquidity sweep to the upside, as you can see here. Something could happen here, but yeah, we have this 1-minute SMT as well. So I'm gonna be really cautious on my entry. I'm gonna wait for a good either inversion of this completely. We fully inverse this gap, and I'll probably enter. Otherwise, okay, yeah, I'm in those. So I'm gonna enter shorts now because we have all our confluences. I'm gonna go ahead and target these lows. It's my TP1. I'm gonna leave a floater to the end of the gap. I'm thinking we're gonna come down and fill out this gap on NASDAQ, and I'm gonna take my stops probably like here. I'll take partials probably at this low, maybe at this low if we make SMT, and then let the rest ride out. But let's go and then let's see enter shorts here, 2%. Partials, yeah, they're there. So I'm just gonna see what yes is doing before I fully enter. Okay, let's move. Ooh, we're at a 5-minute gap though. I think we're good though. A little bit of a scare there, a little retest. Maybe that was a better position to enter in. Looking good. Price is slowing down, kind of coming back up here. Another retrace. Just let this ride now. Okay, boom. Oh shit, I should have. Okay, well, my TP1 got hit. I just didn't enter properly, but I'll now save this. Took some profit there. Stops are break even, so if I get break even, it's fine. Looks like we're gonna continue pushing lower. Maybe come up here. I'm just gonna be curious and check if there's a 5-minute SMT. Oftentimes, if there's like a clear 5-minute SMT, like in this case, I might exit like a little more of my position out because there's a more likelihood of reversing. So I'll probably exit out 25% of my position here and then leave. I still have a good amount riding, so 75% of my original position is riding. 25. Keep end up pushing below, and as you can see, it's really like 4 p.m. right now. So we're just continuing down. Looks like we're about to hit final TP. Why is it stopping? There we go. Final TP hit. So a clean short. Taking it and took this trade at 11. So really patient. So just a recap of the day and of like this little trade and what we took. So essentially, we identified first of all, we hopped on, saw bullish and bearish confluences, right? And we clearly identified two things that were going to happen. One, if we took out these highs immediately, we'd be bearish off rip. We took out these lows, we bullish off rip. So we ended up taking out these lows, we were bullish, we didn't find an entry, which is okay. So we ended up going up, ripping above these highs, which was a key level being hit. We waited for a 5-minute inverse value gap, which we got. It was a little choppy for a bit. We ended up getting that we fully ended up getting that 5-minute close and the fair value gap and the retest. So that gives us, like as you can see, key level, the key level being the highs, the 5-minute confirmation being the inverse fair value gap, and then we have the 5 minutes unfilled fair value gap retrace. And then we just scale down to the 1-minute time frame. Scale down to the 1-minute time frame here, and we just observed. Let's lock this. We just observed that we kind of had this 1-minute like liquidity pool here, and we were kind of very cautious with our entry. We identified a 1-minute inverse fair value gap, which we took here, entered off this 1-minute fair value gap, retrace, kind of pushed a little bit into drawdown, but it's fine because we ended up cleanly going down and hitting our full TP, taking our partials, TP1 here, moving our stop loss to break even, and ultimately making 50 grand off $1 million, which is basically like $5,000 if you're looking at it from 100K's perspective, which is a good overall trade. Clean trade, hit a 1 to 4. This is exactly how my model is supposed to be traded, with very patient setups, following the rules, identifying your bias early. So I think it's a really good example of what my model is and how I trade it. I'm probably going to do another example tomorrow night. This is a good example of what my model is. And as you can see, there's lots of other factors that went in apart from these rules. Like there's a 1-minute SMT like that. So it's all really about being patient. Because if you look at this trade, we entered at 11, which is not normally when my trade happens, but the setup happened here. So I took it here, right? And it's we were really disciplined with not being impulsive and taking that long up, because we would have made less profit because we would have maybe hit our TP1 here and let our TP2 ride all the way up here. We end up reversing before that, right? So it's otherwise a really clean downside trade. Just some of these things that I kind of add on just come with experience, but this is exactly how my model is supposed to be traded. And these are the exact steps I look like I followed. You guys saw me follow these steps. And yeah, I forgot to talk about the stop loss. We just put our stop loss above this retrace zone, which I already marked out. The consequent encroachment of this 5-minute fair value gap, right? We just marked, that was just our stop loss level and our take profit level. The reason why I chose this unfilled gap is because one, as my final TV, is because one, we already did that on ES, and two, I know that if we're looking at shorts and an unfilled gap, I know price is going to rip to the unfilled gap like it did here. And this was a clear TP1 level. I mean, it's a London low and a pre-market low, essentially almost kind of an equal low. So it's a clear TP1 level, safe level to be hit. And it was, clean, smooth trade, 50 racks on a mil. So basically 5,000 on 100K account. So clean trade. That's pretty much it for today. Good, we got the strategy and model video out. I'll probably might do another example tomorrow. And looking forward to trading again on Monday and making some more money in the live account. But that's it for Maximus Trades. I'm out.